Welcome to the Deep Dive. Today is June 26th, 2025, and we're going straight into the big headlines. Our goal, as always, is to cut through the noise, pull out the essential insights, and really give you that shortcut to understanding what matters.
Absolutely. And what's really striking today is seeing these connections. Financial markets, global politics, trade deals, they might seem separate. But when you look closely, you see how they influence each other. Understanding that web can really sharpen your perspective on things, give you those aha moments.
Okay, let's jump right in then. Big story in finance, the U.S. dollar. It's had a really rough first half. Actually, it's worse since 1973, down over 10%. And significantly, this follows former President Trump's comments about Fed Chair Powell.
Right. Criticizing Powell, even hinting at a replacement. And the market reaction was, well, swift. Investors essentially started betting on interest rate cuts almost immediately. It's like they were pricing in a potential policy shift based on that political signal.
So they're anticipating a change at the Fed, leading to easier money.
Exactly. That expectation then helped push stocks higher. For your portfolio, this points towards maybe a more dovish Fed down the line, which, affects everything. Inflation, expectations, investment choices, the works.
Interesting how politics feeds directly into market bets like that. Okay, while that's happening, there's another economic issue simmering. Treasury Secretary Bessent has extended the debt issuance suspension period, pushed it to July 24th. Can you unpack that a bit?
Yeah.
It sounds like jargon, but it's important, right?
It is important. It's basically an accounting tool, a temporary fix. The Treasury stops certain payments, like to government pension funds, so it doesn't breach the official debt limit set by Congress.
So it buys time.
Exactly. It buys time for Congress to act. They need to raise or suspend the debt ceiling before the X date this summer. That's the date they project they'll run out of these measures in cash if they don't act. Well, the consequences could be pretty serious.
Like what sort of consequences?
Think delayed government payments, Social Security, maybe federal workers potentially furloughed. Even a U.S. credit downgrade is possible. That would send shockwaves through global markets. Real instability.
Okay, so a serious deadline looming there. Yet, despite that, market optimism seems, pretty strong today. Futures for the S&P, the NASDAQ, the Dow, they were all up. Nearing record highs, actually.
Yeah, and that optimism ties back partly to what we were just saying, the hope for that dovish Fed shift. But it's also boosted by, other factors, some positive signals from recent ceasefire talks, plus developments on the trade front. All this creates momentum, especially, it seems, for tech stocks, which often do well when rates might fall and global trade looks smoother.
Right, it's never just one thing driving the market, is it? It's this whole mix. And speaking of trade, there's actually some positive news there. A U.S.-China agreement.
Yes, specifically on fast-tracking exports of rare earth minerals from China to the U.S. This is potentially a very big deal for industries that rely heavily on them.
Like EVs.
Yeah.
And aerospace.
Exactly. Electric vehicles, aerospace, defense, all critical sectors. This deal could ease some major supply chain bottlenecks, potentially making U.S. industries in those areas more competitive and perhaps more resilient after the disruptions we've seen in recent years.
Okay, so that's a potentially stabilizing move on the trade front. But then shifting to geopolitics, things sound a bit more tense. Iran's supreme leader's recent statement, calling U.S. airstrikes a heavy slap.
Yes, and including a warning about potential attacks on American bases. What's really notable is the timing. This comes even as those ceasefire talks we mentioned seem to be making some progress.
Hopefully it complicates things.
It definitely adds another layer of complexity. Such strong rhetoric, despite the talks, could certainly shift the military and diplomatic calculus in the region. It's something we absolutely need to keep an eye on.
Wow, okay, so quite a range today. We've gone from dollar fluctuations and Fed speculation to the U.S. debt ceiling, market highs, a China trade deal, and now warnings from Iran. It really highlights the interconnectedness, doesn't it?
It really does. Everything touches everything else in often surprising ways. And maybe that's the thought to leave with today, given how quickly things can shift, how these economic policies and geopolitical tensions we discussed, how might they continue to interact and reshape your world as we move through the rest of 2025? Something to think about.